Hello there, welcome to IGTV, broadcasting from a rather grey-looking London today. It's rather depressing here. Now, we finished the week with a shockingly low US payrolls figure with just 38,000 jobs added in May. A figure of 160,000 was expected, which suggests that the labour market in the world's largest economy is weaker than assumed. But moving on, we're going to look forward just now and check out the economic data, starting with Monday, June the 6th. Let's go. So we start with Australia unemployment there. We've got EU market retail data, just a whole plethora of PMI stats from across Europe. Tuesday, this is the one we're going to analyse and dissect in a second. It's the RBA interest rate decision. And next week, something that's going to cause a bit of excitement, I would imagine, is that ITV referendum debate. That's going to be with David Cameron and Nigel Farage. Let's move on. Wednesday, we've got Japan GDP, China trade balance, UK data and US stats as well. The oil numbers we will analyse in a moment. Again, ITV, that's going to be a referendum debate, but we don't know. It's all a bit of a mystery at the moment as to who is going to be debating. We don't know the names. We've also got China CPI there, Germany trade balance, and UK and US stats too. Finishing off the week, it's going to be exciting. I'm looking forward to this. It's Euro 2016. It's going to be France versus Romania. Germany CPI as well, Canada unemployment, and US Reuters stats as well for consumer sentiment. Okay, it's going to be a busy one in terms of economic data. Obviously, Brexit is going to be eating up a lot of headlines as well. But we've got some important rate decisions happening down under in New Zealand. Now, let me introduce my friend here, Josh Mahony. Hello to you.
Hey.
Thank you for coming in. You're going to talk about the rate decisions, aren't you? Should we start with New Zealand? So
Yep,
nothing's
sure.
expected, right?
Depends who you're asking.
I'm asking you.
Well, yeah, no, for me, I don't think anything's going to happen. But the thing is, when you look at some economic calendars out there, they're saying that actually we could see something from the RBNZ. And when you've got, on one side, you've got a number of different economists being polled and they're saying, oh, actually, nothing's going to happen. On the other side, you're seeing economic calendars saying that we're going to see a cut. This split decision means that whatever they do, you should see good volatility. Mm-hmm. So it makes it an interesting thing to be looking out for. This is the daily time frame we can see here. Now, ultimately, what we're seeing in terms of price action really is reflecting the big move that we've seen from this payrolls number. So largely the dollar's selling off across the board, which is helping this on its way. But we had been seeing some signs prior to this that we could be bottoming out. We can see on a 4-hour chart that we had actually broken these initial swing highs and then we started setting a new lower high. So there was a signal that we could see a move higher, but ultimately this is purely fundamentally driven. Looking at it, it looks like it's set on its pathway back towards this 0.7 mark. Your next sort of major levels are 0.705, which is your previous peaks from back in April and May. But certainly it seems to be set back on a more positive trajectory, and that is really sort of going with the trend that we've been seeing throughout 2016. You can see we had around about 4 months of upside. Yes, May wasn't particularly favourable, but that could be seen as a sort of retracement of that move in the first 4 months, and as such the move that we're seeing at the moment is geared towards this idea that we could see further weakness in terms of the US dollar. The US dollar index in particular has been selling off very heavily, so this is going to be something that will be volatile for next week. And it's certainly going to be interesting because of the fact that now we've seemingly marked a bottom and we're trying to head back towards that 0.7, 0.705 as your next major points of resistance.
Okay, and an interesting fact about New Zealand and the economy is that the OECD said that the weakness in the dairy sector is a real problem for them. It's creating a lot of pressure. All right, let's stay down under and talk about the RBA rate decision then. Any expectations on that?
No, we don't think that we're going to see much out of the RBA, quite honestly. Nevertheless, you know, obviously, it's a case of looking for the language around that. You know, what are their expectations going forward? You know, I guess, you know, we're talking about these different economies that are hugely reliant on China, and China
in commodities
isn't doing particularly well. The commodity side of thing is doing kind of all right. We're seeing, it depends what you're looking at, but certainly, some of the commodities are really picking up heavily alongside the likes of oil. So Australia is actually doing better than it has been doing the past few months, and therefore you'd think that they'd probably sort of stand off and see exactly what previous policy decisions will have done. Nevertheless, it's a similar kind of story in terms of the Australian dollar. This was Chris's trade of the week, and I tell you what, he's literally been saved in the last second by a very low payrolls number. Nonetheless, it looks like a genius move, because you can see ultimately, and this is what I was saying to him earlier, I said, you're crazy to be saying that your trade of the week is to go long something that's gone down 1, 2, 3, 4, 5 weeks in a row. Lo and behold, your big green candle for this week, you can see that it has clearly seemingly bottomed out here. You can see that rounded bottoming pattern, and now we're breaking out of this. So it looks like we're going to be moving on to a more positive trajectory for the week for the Aussie dollar. As long as we don't break below this 72 mark, it's likely we're going to start seeing more sort of stepped move higher. You can see it's been relatively consistent on the way down, so there's no reason to believe it won't be the same on the way back up.
All right. We've also got another inflation read in late July as well for Australia. Let's move on and talk about oil.
Yep, let's. This is one I've been trying. Look, ultimately, you're a bit of an idiot if you constantly try and say this is a top, this is the top, because trends can go on for months, and certainly this is the case for US crude, and people have tried to pick the top of US crude for a long time now, and it keeps kind of rising for months. Nonetheless, we're seeing some tentative signs that we could possibly be moving on to a more negative trajectory. Namely, if we've got this daily time frame, you can see that we've got this sort of rising wedge pattern, which generally is something, the exit out of it is likely to be towards the downside, which makes sense because it's rising, so you'd need to be rising at a very fast rate to be breaking out the top end, whereas you just need to slow down for it to be breaking out towards the bottom of it. Now you can see that's happened. That's a first sort of heads up that we could see some sort of change in sentiment. The 4-hour chart shows you that we've got this little double top formation. That's something we haven't seen for a while, where we've actually broken below a key swing low. You can see we tried to do it here back at the beginning of May, didn't happen. So we actually managed to break below there, and now you can see we've got that trend line that was underpinning this wedge is now providing resistance on 2 occasions. So yes, it's taken a while to turn around. There's no guarantees it will turn around, but certainly this is asking some questions it hasn't asked of it for a number of months, and therefore this is definitely going to be a really interesting market to watch. Of course, that OPEC non-deal was something to push it lower. Then immediately we saw that crude oil inventories number push it higher once more. Next week we're going to be seeing again another crude oil inventories number. But I'm not saying this is definitely a top, but I'm saying this is doing things it hasn't done in recent months, and that gives me the idea that possibly this could be starting to turn over. So whether it can break back through 50 or whether it can break back down below this 47.26, I think if we got below there, then all of a sudden it starts to look like people will probably start jumping into the downside.
Okay. Well, there's never a dull moment, is there, when it comes to oil? Let's talk about corporate stats, because it's actually rather slim next week. There's not a great deal going on, but we still want to let you know what to put in your diary. So easyJet May traffic then. So there's been lots of airstrikes over France recently. Now we've got to consider that 60% of easyJet's entire flight programme normally crosses over French airspace. On Tuesday, it's Porsche, the automobile holding as well. We're going to be talking about that and its association with Volkswagen. We've also got Wednesday being probably one of the busiest days in the middle of the week. WH Smith there and Sainsbury's with a trading statement, and Shoe Zone. I love shoes. Thursday, we've got Flybe as well, and we really are at the we're right at the peak, aren't we, at the holiday season. We've got Home Retail Group as well. We are going to discuss Sainsbury's too, Bellway as well. And finishing off the week, it's Fuller Smith & Turner and SAS there. So, Josh, it is a rather quiet week, isn't it, for the corporate data? But where do you want to start? We've got Sainsbury's to talk about. Sainsbury's is having a tough time, though, isn't it? Because you've got the higher end of the market, you've got Marks and Spencer's, their food, which is always very popular. Yeah. But then you've got the budget supermarkets as well, the Lidls. Where does it fit? Has it found its place?
Arguably not really. I mean, ultimately they're a big firm that are on many of the high streets, so they have that in their favour, that they currently have a strong position anyway. But market share isn't necessarily guaranteed, and that's why they tried to move into a different sector. They want to get Argos and start diversifying away from an industry that's clearly not particularly easy to get on with, especially if you're one that's not necessarily producing either very high quality or very low cost. And Sainsbury's don't do either of those particularly well. The interesting thing is that within their sector, one of the big threats in terms of the supermarket sector is Amazon, because they're coming out with this whole sort of groceries plan, and then they've teamed up with Morrison's to be able to deliver things on that side. So they decide they want to go into start selling things like Argos do. Now, Argos' biggest competitor, and probably if I was going to buy something that Argos would sell, I'd probably go on Amazon. So Amazon seem to be their sort of rival in whatever they want to get into. They seem to be coming up against Amazon, who do things generally cheaper, and with deliveries being as easy as they are nowadays, it's arguably just as easy to use Amazon as it is to go into a shop. So
it's a big rival.
It's a difficult position to be in for Sainsbury's. We can see, this is the daily time frame, you can see that we did stage a sort of recovery throughout the first few months of the year. Now you can see it's clearly sort of dropped off a cliff. You can see this big deterioration. We did try and recover for the back end of May, and now it's smashed lower once more. So for the time being, it's not looking particularly rosy. If I show on a weekly time frame, it can give you a little bit more of a sort of wider outlook. You can see that largely over the last, say, year and a half, we haven't really managed to break out into any sort of real trend. It's been very choppy, and now we've seemingly come up towards the top end of that range and then turned around once more. So it looks like we're probably likely to see further selling, especially because of the fact that we've seen this failed sort of retracement, failed break higher, and then now we're pushing lower once more. So I would expect to see further downside for Sainsbury's. The question mark is, are we going to break these previous lows? If we don't, then it's likely we could just find support around about 235, 240 and start rising back towards the top end of this range. So really, this isn't something that has necessarily been able to sort of take a long-term view in terms of bullish or bearish. It just generally seems to just take a month of downside, a month of upside, here or there. It's very choppy, and that says a lot about the business, really. I don't think people are really too certain where it stands.
We don't like uncertainty around here. All right, WH Smith, let's talk about that one, shall we? Because there's been a lot of shops turning up at railway stations. They seem to be doing really well in that department.
Yeah, certainly, and that's the one thing that seems to have been saving them. This idea that they do really good business in airports, and they do good business in railway stations, and actually when you're going down the road, generally you don't necessarily want a magazine because you're walking down the road, you're not going anywhere, and everyone uses their phones nowadays anyway. So, that's the one thing that's actually been saving them, whether they're going to be cutting costs and actually being able to trim back on the locations that aren't necessarily as profitable, and then just try and expand in other areas. It probably makes a lot more sense than to have, a lot of shops on the high street which don't generally make that much profit. But in terms of the share price, it's been a very consistent performer. You can see largely throughout 2016, it's been somewhat flat, I would say. We did see initial gains, but from there it sort of tapered off somewhat. We are seeing some gains ever since then, but you can see generally, the long-term trend has been pretty incredible. It rarely drops below that 50-week SMA, which is where it's been sort of toying with over the last, say, 2 months. That would give us the idea that possibly it could be at a sort of relatively cheap price. Now you can see here we've got this sort of trend line, previous support turned into resistance. That's not a particularly bullish sign, but currently we are creating higher highs and higher lows. We also posted that long-legged doji yesterday. That gives us confidence that we could possibly come into next week with a period of strength. However, with the wider market selling off, also with the fact that we've broken below this trend line and now finding resistance on that, and the fact that we came very sharply into it and now in a more sort of shallow trajectory, that looks more like a period of retracement of this move and would precede another move lower, as opposed to the beginning of a recovery. So that's going to be very interesting. In particular, if we break convincingly below that 50-week SMA, like I said, it doesn't usually do that. It hasn't done that properly for years. If we did do that, then all of a sudden you could see the selling ramp up. But we haven't necessarily seen it at the moment. We could see a rebound back up to this trend line, but how it responds from this, and whether this is just a retracement before another move lower, or whether this is just a bottom and it's gradually trying to make it back to the top, that's a question that we want to see answered for WH Smith.
Okay, well, hopefully it'll get answered next week. Let's talk about easyJet, because I did mention we are at the peak of the holiday season, but there's been lots of strikes. Is that affecting the stock?
Well, yes, we've not seen it doing too well in the past few days, but we did see a nice rally through May that actually took us out of this sort of downtrend that we've been seeing pretty much throughout 2016. I think ultimately it's a difficult one because, you know, on one hand you've got this whole story of, you know, increased terrorism. People don't necessarily want to go on holidays as much, you know. On the other hand, you're thinking, well, actually, the companies that will probably fare all right are the budget airlines, because they generally seem to be able to weather the storm a little bit better than most. But what you can see here is on the daily time frame, again, this downturn that we've been seeing throughout 2016 seemingly negated now that we broke up above this sort of 1527 kind of mark. Now what we're seeing looks like a sort of consolidation or a retracement of that. You can see once more inside trend line, previous resistance turns into support. So that's certainly something to be looking out for, around about £15. If we look at this as a retracement, you'll be looking at the Fibonacci levels, and if we zoom in to make it a little bit more clear, I mean, any of these levels down here, 1474, 1453, if it came to that, then that would be quite attractive for us to be going long once more. But that would have to get through this inside trend line. So that's sort of further away if we did get a deep pullback, depending on the numbers that we see next month. But certainly it looks like they're moving onto a bit more of a positive trajectory, and possibly the bad news has largely been factored into this share price now. Maybe people want to get back on board.
Okay, so possibly taking off then. Okay, next week, can you just conclude the vibe?
I can definitely conclude the vibe. Essentially, look, everyone spent the last 2 weeks talking about whether we're going to see a June rate hike. We're not going to see it. Arguably, we're not going to see one in July either. So that's going to be this whole story of, you know, US dollar weakness. All of a sudden, you're going to start seeing people talking about probably pound as like maybe a good investment. Now, ultimately, you know, we're getting closer and closer towards this Brexit. This week, we've seen the Brexit polls come out seemingly more in favour of leave than we were certainly expecting. Prior to that, it was a lot more about Remain. So as we see a continuation of those polls, that's likely to be feeding into what's happening in terms of the pound as well. And ultimately, you know, we're in a period of time where we've got so many different sort of events coming out throughout this month, so many big events that could push the markets one way or another, against a backdrop of Brexit and the FOMC. It's likely to be another volatile week.
Oh, we like volatility because it's more interesting.
Definitely.
All right, Josh Mahony, thank you very much. Really appreciate that. That's very helpful indeed. And I hope you enjoyed that as well and you took some notes. Thank you for watching. We really appreciate it. Have a fantastic weekend. Goodbye.